wall of rain moves into the northwest. So going to try to keep this one kind of short and quick today. So we're just going to kind of jump right into it with general market updates. We'll talk about kind of what we're seeing both locally, nationally. Do want to talk about a little bit of projections, not too much, but a little bit as it relates to what likely is coming on the mortgage side. Renters, there's going to be a lot of, me, supply and demand kind of talk. So let's just sort of jump right into it with the usual lead in of hey Jeff, how's the market? So jump right in. On the Oregon side, the lockbox activity, this is, like I said, every time Jeannie and I open a door for clients, it registers activity. So this is kind of that general tracker. So in the kind of the Portland metro area, we're down 8.5% from last week. And if you kind of look back to the kind of the second data point to the far left on that graph, it puts us roughly on track with where we were last year, maybe slightly below, but definitely waned off from last week. No real rhyme or reason. Could just be kind of the start of seasonality. It could tick back up, who knows, but that's just where Portland came in at. And I say there's no rhyme or reason, and it's questionable because let's go across the river, and Washington area spiked up. They had a little bit of a pullback the week before, and this week up almost 6%. And this definitely puts them above last year's pace, not by a ton, but a little bit. So again, no rhyme or reason. See what happens. So that's kind of your local what's happening here lately. I want to talk about kind of the economic news going on a national basis, right? Because you always hear me talk about when you're looking at housing, it's supply and demand. That's all this is at the end of the day. So let's talk about the demand. October unemployment rate is declining down to 6.9%. So that's good. Probably still not as low as anybody wants it to be, but heading back in the right direction. They are showing a lot of the growth is coming back, obviously, in what you'd expect. Hospitality type business services types of businesses, those who have been hardest hit by COVID. So they're slowly but surely getting back to work. I think the big question mark is going to be over the winter time, especially for hospitality, wait staff, that kind of thing. I think were able to hold in there pretty well through the summertime, outdoor dining, outdoor events, outdoor everything. Now with winter coming, cold, wet, snow, wherever you live, we'll see what happens. Hopefully it hangs in there, but we'll see. And another headline kind of popping up that that the Fed came out basically, well, what's going to help fuel ongoing demand is Fed's basically saying we're not going to move the interest rates simply because while things are improving, we're still below the pre-pandemic levels, right? So we saw the third quarter news coming out. It was forget how they couched it. It was record growth in the economies, up 36% or something like that, which is a great soundbite. The second quarter was obviously down 30 some odd percent as well. So still have a long way to go. We're still not where we should be. Still probably off, 10, 15% on a GDP basis, but it's coming back in the right direction, which is good news. But if you start kind of thinking about what's coming now, so we're hearing unemployment's coming down. Pfizer today made an announcement that they have developed a vaccine that I think is 90% plus effective against COVID. That's good news. And completely apolitical, the election is over, right? So irregardless of who was going to win, just having the election process over is going to have a positive impact on everything. So in this case, the election's over. Things are ticking up. You're getting good COVID news. Unemployment's kind of coming down. Good news in the market is bad news on your mortgage rates. So as Pfizer made their big announcement today, possibly a way of getting COVID under control, that's the biggest anchor on the economy. If that's true, and if it holds, that's good news for all of us for working, which will help start pushing the stock market, which is going to start trying to drag your mortgage rates up. So they're still historically and ridiculously low right now. I would not be surprised to see a little bit of upward pressure here over the next few months. So just something to kind of think about. So there you go. Other headlines that come in on a national basis, and this is certainly true in the Pacific Northwest. For those of you who are working with Jeannie and I right now on the buying side of life, it's a little crazy out there. And so they're talking about this winter's slow home selling season may be the biggest one ever. And it's really for no other reason other than COVID. We had sort of that false spring, and about a good 2-month delay where we sort of lagged traditional output in terms of numbers of homes being sold and bought. and it's just pushed everything kind of to the right on a timeline basis. So I do still think we'll see a little bit of a slowdown, probably in the month of December. I think we'll probably still outpace last year, but the seasonality, it's inevitable at some point. That said, keep in mind in the Portland metro area, typical seasonality slows down, say November, December, January, but the home buying season starts in February every year for the last, I couldn't even tell you how many years. It starts in February. You can see it. And we'll get to those graphs, soon enough, but you'll see that's where the activity starts picking up. But so look for this winter to continue to be hot, continue to be busy. There's going to be still a lot of homes buying and selling, and then the side effect of all that with that push of demand, is you're going to start seeing your winter activity is still going to carry your summer prices. So prices continue to rise. There's really nothing's going to let pressure off of that, simply because this is, again, like we said, supply and demand. The demand is high, while rates, I think, are going to start seeing some pressure. They're still super low, lowest that they've been, arguably probably ever. So it's still an amazing time in the market. So don't look for any relief on prices. If there is going to be sort of a letting off in things, I think you'll maybe just see a cooling of the appreciation rate. So instead of 8, 9, 10, 11% kind of growth, maybe we scale back and you see some decline down to 3%. It's better. It's still positive. So that said, what you hear from me all the time, supply and demand. So the only thing that's going to then offset any of that to try to give some sort of relief, either for the veracity of sales that we're seeing, the climbing level of prices and so forth, would be if we can push supply. So this chart came out, and I knew this was going to be a little bit of an eye chart, but at this kind of scale. But Portland is one of these lines. I'll point it out here in a second. So this is basically your single-family house permits versus your peak level. And the peak level, they said to say, looking back between 2002 and 2008, when builders were building at a very rapid rate. It did end up creating a little bit of an oversupply, but not by a lot, because it was quickly absorbed through the Great Recession. But basically saying, where were we building, to 8, 12 years ago kind of time frame versus where are we now? So like, for example, the very top line, Chicago, is 83% less construction happening than right now than during that time period. So I think you see how this works right now. At the very bottom, the Austin market, they're building 10% more homes than they built back then. So in terms of alleviating a supply and demand mismatch, Austin's going the right way. They're building more homes than they were before. They're going to start kind of meeting some of that demand a little bit easier. Now you get the idea, right? Everybody else is not building anywhere near the amount of homes that they were building prior to that. The yellowish line kind of in the bottom third is just your weighted average across these major markets. And about one line above that. So 38% is the weighted average, 38% decline. Right above that is Portland, 41% down from our peak construction period. So how do you match or cool off the fire pitch impact of heightened demand? You build, and we're building 40% less homes than we did before. So you keep hearing me say this again and again and again. The Great Recession created a nightmare for this country. We stopped building homes. A lot of builders went out of business. A lot of them got spooked. They couldn't get the financing to buy the land to build their projects. Now they can, but it's a little bit slower, and it's going to create headaches for quite some time to come. So there you go. So we also talked about, want to kind of get in that it's not just about homeowners, but also renters to an extent, and kind of what's happening and what's it going to mean. And this little infographic came out, and I just thought it was interesting, saying one of the big winners right now is what they're calling the build for rent. And what they're basically meaning is you're still building a lot of single family homes, but a lot of these now are being snapped up and bought for investment properties, right? There are a lot of people who say, I'd rather rent than own a home. I definitely want to be in a house, not in an apartment. And so supply and demand again, the demand gets pushed up for rental houses. So your rental rates are increasing, which is now snapping up more homes because investors realize I can make a decent return on a single family home, probably a better investment than buying a condo or a townhouse. So let's do that instead, which then exacerbates pressure on everybody else trying to buy a house because now there's fewer of those available. Dovetail that sort of on a national basis, single family rent index. Looks at major markets across the country. And basically, here's your color scale. If it's red or the closer to red you get, the lower you're seeing your growth in rental rates for single family homes. So like if you want to look at, say, the Houston market, it's 0 to 2%. San Francisco is 0 to 2%. San Francisco probably needs a negative color because it can't be good there. But go just up the I-5 and you get to Portland. It's a nice bright green, which basically means it's a greater than a 5% increase in single family rents. And I think you're going to see this because of two different things. Again, we don't have the supply of homes. As you heard last time, we did our last the October market, or the September market update. We had 1.1 months of inventory, which is the lowest it's ever been since the RMLS has been recording the stat. So those are being bought by investors as well. So as you don't have enough rental houses to go around, rents get pushed up higher and higher. So on an aggregate basis, it creates that skew. Secondly, yes, we have our rent control measures in effect, which say you can't increase your rents more than a 10%, kind of round number 10% increase year over year. And so I think you're going to see a lot of landlords saying, fine, here's your 9% rent increase. It's legal, it's fine. It fits the boundaries, and it still doesn't help solve the problem that's happening. So your demand is high, the supply is low. I don't see any way you get that supply increase anytime soon with our urban growth boundary. So obviously then you see headlines like this coming up that the homeowners and the buyers are the real winners in this election, simply because if you're a home owner, your property value is increasing left and right. You're adding real value, real economic value to your family. You're building wealth there. If you're looking to buy, it's a fantastic time. You're a big winner because mortgage rates are ridiculously low. And I would argue you're insulated from, you're not overpaying for your home. Because again, what's going to cause those prices to come back down anytime soon? Not much. So if you're going to be buying a house, do it now while the rates are just stupidly cheap, because you're going to look back on this day and laugh. Your kids are going to look back and scratch their heads wondering, how did you ever get a mortgage for 2.75%, 2.5%, 3%? They're going to be looking at probably back in the normal 5, 6, 7% range. Who knows where it's going to be, but it's not going to be a 3% or sub 3% mortgage market. So it's a great time. And lastly, I just want to go out on a high note, whether homeowner, home buyer, whatnot. It's just a positive mark for all of us across the country. Forbearances are at their record low. Yeah, they said there's a little catch. It's just talking about some got extended, but whatever. Throw the catch out the window. Forbearances are the lowest that they've been since this whole thing started. It's just one more little piece that shows that things are moving back in the right direction for us as a country. So there you have it. Supply and demand. Don't have the supply. We got nothing but demand. It's crazy. It's going to stay crazy. Mortgage rates are cheap. If you're going to do something, it's a great time. Probably going to stay good for all next year too. So there you go. Short, sweet, shortest one I've done in a long time. Have a good week, everyone. We'll see.